All right, guys, back to work tonight. Weekend is over. Time to get back to work. It's Monday evening after all. Tuesday's trading session is right around the corner. It's March the 1st, 2021. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to get us ready with the best trade setups, the best opportunities for tomorrow. That's Tuesday's trading session. I got a jam-packed video in store for you guys and gals tonight. Charts are all prepped up in the background. As you can see, got the E-minis, got the Nasdaq, and of course got the gold on our radar for tomorrow. Speaking of tomorrow, boy, quite a bit to cover tonight in this video. Got some big news coming tomorrow and the rest of the week. I want to make sure you know when the big news headlines are expected for tomorrow and the rest of the week. Had some big moves on the charts today. Big move up on the E-mini, big move up on the Nasdaq. Pretty big move down the gold, but that may not last forever tomorrow. Not to worry, we're going to break this down into all my favorite setups we're tracking for Tuesday's trading session. Before we jump in, though, and get our hands dirty on these charts tonight, I just want to make sure to remind you, you got to subscribe to our YouTube channel. We publish this video newsletter every evening, Monday through Thursday, with our best trade ideas for the following day. I don't want you to miss tomorrow night's video newsletter with all the best setups for Wednesday. So make sure you subscribe to our YouTube channel, and when you do, hit that little bell icon so you always get notified every time I upload something new. Also, don't forget too, if you have any questions at all, any questions tonight, drop those questions for me in the comments section. I'd love to answer all your questions, so drop the questions below. And you know, guys, I really appreciate you guys carving out some time every evening to watch this video. If you enjoy this video as much as I enjoy making it every evening, hit that like button, hit that thumbs up button for me here. Thank you so much for supporting this YouTube channel by subscribing. Drop those questions below and thumbs up if you guys enjoy the video here tonight on this nightly news. But enough of the introduction. Time is ticking. Let's get into those charts. We got Tuesday right around the corner. Well, I'll be right. New day, new month, new week. Can't believe it's already the month of March. What are we looking at going into tomorrow? Big moves, right, on the S&P, the Nasdaq, and kind of a big move down on the gold. Now, of course, the E-mini. Nice strong pop higher here on the E-mini. We're right on top of that 3,900, right? There's a good chance that we go sideways for a big portion of tomorrow, right? So we're expecting a bit of a range-bound market. Range-bound markets tell me two types of trades to look for the following day. Honestly, on the S&P, I'd like to buy pullbacks, right? Nice big bull move up. I've got two spots I'm looking to buy pullbacks right now on the S&P. And as you can imagine, depending on which area of support holds, that will determine which type of entry setup I'll be focused on here tomorrow. So shallow pullbacks and deep pullbacks on the S&P. I'm going to talk about how to trade both shallow and deep pullbacks. You definitely want to stay tuned if you're an E-mini trader tonight on this video. Nasdaq is similar to the S&P. The Nasdaq, of course, you can see here, had a very strong run higher as well. One key difference, though, in the Nasdaq is the Nasdaq has not completed what we assume to be its big objective up around that 13,360 area, around that triple measured move. You know, we know we're bullish right now in the Nasdaq. I'd love to buy a nice deep pullback here on the NQ, specifically around that 13,200 here tomorrow. I also have a range down here right below us. If the market really does pull back really deep, I got to be careful with that deep pullback. Would love to see a deep pullback on the Nasdaq, but that range tells me I better be careful buying those deep pullbacks. Not to worry, I'm going to talk all about my favorite entry setups on the Nasdaq. We'll also talk about, right, if the market keeps going higher here, because we got some big highs overhead here, maybe some traps as we go higher here. And then over on the gold, right, you'll notice gold is clearly bearish right now, but there's something going on right now with gold, right? The way the market went up and came down and kind of sat here, and now I'll tell you, it feels like it a bunch of support down here on gold. I'll tell you right now, if I'm a seller I'm not too happy to be selling short where I am right now. If I'm trying to sell this gold, this is the last place I want to be selling. And because of that, it definitely kind of tips us off to possibly a reversal going back higher. I'd love to get long on the gold. I know it sounds crazy, but when you see this chart tonight on this video, it's starting to look like gold might be more of a buy than a sell here. We'll talk about both sides though, obviously, right? The buy side and the sell side on the gold for tomorrow. So as you can see, lots to cover here tonight in this video. Before we kind of jump into these charts, real quickly though, let's grab a look at the calendar for tomorrow because, of course, it is the first week of the month. We do expect the last week of the month and the first week of the month to always be some of the most volatile times of the month, right? So we're definitely expecting increased volatility. It should pick up right where it left off. Probably not as crazy as it was last week. The end of the month does tend to be a little bit more volatile than any other time of the month. So probably not going to be as cuckoo as it was last week, although we did have a lot of fun last week in our trade room though, I will admit. But we do expect there to be increased volatility again here this week. The most important news here this week is going to be the ISM at 10 o'clock on Wednesday, the jobs on Thursday, and then drum roll, we got the employment number here on Friday at 8:30 Eastern time. We do have Powell. Powell is supposed to speak sometime on Thursday afternoon. We'll see how much that impacts us. But as you can see, though, tomorrow, though, there's not a lot on the schedule for tomorrow. So, anytime we don't have a lot of news to kind of get us going, I usually, that day, if there's not a lot of major news there, usually that 10 o'clock to 11 o'clock block is usually where you're going to find the most quality setups. Not to say you won't find stuff earlier or later, but, whenever I see a situation like this where there's no major news tomorrow, the markets are generally going to hang on to the top of the hour, right? So 8 o'clock, 9 o'clock, 10 o'clock. And usually that 10 o'clock hour, if I could only be at my desk for 1 hour tomorrow, it would definitely be that 10 o'clock to 11 o'clock. What I would do is I'd be there for 9:45 to 10:45, right? Get ready for that 10 o'clock hour. But as you guys know, we'll be in our trade room tomorrow morning, all morning, 8 o'clock. We open up. But again, if you could only be there tomorrow for an hour or so, definitely try to make it there in the trade room tomorrow morning for that 10 o'clock to 11 o'clock hour. And again, 8 o'clock tomorrow morning, we'll be getting together tomorrow, trading this stuff together in our trade room. So no major news tomorrow, but that's the end of the no news, right? Then we go into big news from ISM and PMI on Wednesdays, jobs, right, to finish off the week, and you get a little bit of Powell there later on Thursday. Okay, let's get back to our charts here. Got the news all ready to go. Let's grab a look at the charts here going into tomorrow's trading session. Lots of trends, right? But of course, a little bit of range, as you can see there on those charts. Let's grab a look at the S&P here first. The S&P, of course, if you recall from last week, finished up the week last week with that big move down, right? Remember the bond bloodbath, right? That sent the markets running lower here, right? Market goes sideways into a trading range, which is what we expected last Friday. If you watched last Thursday night's newsletter, we were anticipating a sideways range into Friday. That's exactly what we got on Friday. And of course, boy, they didn't waste any time whatsoever on a brand new week and a brand new month with a large, strong 1, 2, 3-legged move, right, coming off of last week's low print. So we know the buyers have control right now. There's a big weekend gap down here. You might notice they're going to have some gaps on these charts. There's no gap on the gold, but there's a gap on the Emini, and there's a gap on the Nasdaq going into tomorrow, or really going into all week. This is a very interesting gap because you'll notice it has not been filled yet. Now, I'll be honest, historically, these weekend gaps, and what is a weekend gap? It's whenever there's a large gap between Friday's close and Sunday's open. So that price right there, that is Friday's closing price. And of course, Sunday, the markets open up, right? These are futures markets. They don't, they're not trading, 9:30 to 4. They're electronic, right? They open up on Sunday, and they pretty much trade all the way through till Friday at 5 o'clock. So we've got this gap between Friday's close and Sunday's open. That weekend gap, closing price from last Friday at at 7.75. Historically speaking, they usually do come back to fill those gaps before the end of the day on Wednesday. Now, it does look a little bit unrealistic right now to expect these bulls just to roll over and let these bears take control here. But be aware, right? That weekend gap will act as a magnet. And if these bears can take control of this, you know exactly where they're trying to take this thing, right? So if bears do take control of this tomorrow, we know this range below us is a magnet. But if the bears sink their teeth into this market, there is one thing on their mind, and that is to take out that weekend gap, close the gap, and then possibly return back up to retest those highs at some point later on in the week or the month. So we know we're bullish. I'm not going to go trying to short this thing right now just because there's a range below us or there's a gap below us, but we do know that range below us will act as a magnet. I want to buy, and I want to buy a pullback. And as I mentioned earlier, I got a couple spots I would like to buy on a pullback right now. I'm always trying to keep in mind, in a bull market, I'm always trying to find support levels down around the low of a channel. You'll notice that I've got that kind of trend line drawn off these highs. I'm bringing it up off of these lows. Now, I'll be honest, I debated whether or not to draw that channel a little bit steeper, right? So be aware of that. There may be some confusion there as far as kind of how to draw that channel. Typically speaking, though, that big low lines up pretty well. I would really like to get that nice deep pullback down around the low of that channel. Now, you'll notice I've got a beautiful, what I would call kind of expanding triangle right here on the chart. Would love to use that, what would be kind of a support trend line as an area to buy. I also really like this 38, this area right here, 38.70, let's call it. These are two prior swing highs, which if the buyers can sink their teeth into that would really be probably the best place to get long for tomorrow. So those are the two spots I'm looking for. As I mentioned in the introduction, though, I got to be a little careful depending on whether I'm buying a shallow pullback, right, or I'm buying a real deep pullback. You know, for example, if I see a shallow pullback, what's my concern? My concern is I'm not buying very low, right? I want to buy nice and low. And when you look at the big picture like this with that potential range up here, you know, it's not the most desirable place to get long. It's a very strong bull market. We really haven't seen much of a deep pullback yet. So I would definitely be willing to buy that shallow pullback. But in order for me to avoid buying too high, my favorite way to avoid buying high is to look for a trap. So on the pullback here, what I'll basically do is I'll let the bears try a couple times and see if I can get a little trap low there to buy. Again, my key is I want to try to incorporate that trend line, that channel if I can. Really the most important thing though is get down into that trend line, right? Again, there could be some confusion as far as where specifically that channel may be. So a shallow pullback here, I'm looking for a trap, right? A trap entry, we call it in our trade room. Now, if the market pulls back the way I want it, right? If it pulls back into that, 38.70 area, now I'm not so worried about buying high, right? Now I can take out the big guns. I can let the bears come in. What I'd like to do is I'd like to get this thing to pull back, right? See if I can get some bears trapped in on a pullback and then buy into their stop loss of the failure pattern, and then of course buy the pullback off the EMA for a retest of that high. So as the market pulls back, think about, right, we get below the moving average, we pull back, the bears try to get short, right, and their stops are a sitting duck right above that high, right? I'm buying nice and low. I'm buying at support. I get a great risk to reward ratio going back up to retest the high. A seller failure pattern is definitely on my radar if I can get a nice deep pullback. And then remember, a lot of times those seller failures, they're going to pull right back above the moving average, and you can grab it for like an add-on, right? Add-on on the way back up to retest that high. So those would be two pattern setups, a failure and a pullback setup, right, as we get that, right, relatively deep pullback, getting into that support area off the high. Now, I can imagine you're probably wondering, okay, Joe, at what point does this market turn bearish? Well, if I get this pullback, right, that I want, and then the bears come in, and if they try and they can hold the move, right? What do we call that? We call that 1, 2, 3 reversal, right? So 1, 2, 3 reversal here. Remember, I'm not going to try to sell that first pullback. Okay, that's not a very highly reliable trade. If you want more consistent results in your trend following trade, you got to be careful being fooled by those relatively shallow pullbacks, right? Now, if the bears can give us a nice pullback and then hold that, right, and hold that test, now you know the bears have control. And now I can look to sell short. Now, I don't want to sell it right on the way down. That's a rookie mistake, right? Chasing after the market as it goes lower. What I'll do is I'll plan the first pullback. Once I see that 1, 2, 3 reversal, I know momentum shifts now. Again, we know exactly where these bears want to go. Now I got to find a way to sell high. I'm going to mark that low. I'm going to mark that high, find that hidden channel, and then look for that first test to sell short off the high of that. Again, we call them hidden channels. All they are, though, is kind of reverse, negatively drawn channels, right? You're drawing off the low, up around that high, and then I always like the first pullback off the high of that channel. Now, remember, that first pullback could be a buyer failure pattern into a bear pullback pattern, into a strength move, right? Into a trap move on the way down. There's a lot of specific entry setups that we may see coming off the top of that channel. I'm not going to go into a lot more detail right now to keep the video relatively short. What I will do, though, is I'll go over all of those key setups in our free trading course. You can grab a link to the free course, pop up here in the upper right hand corner. If you have not taken that free course yet, and if you want to get more consistent results, if you're trying to break some bad habits in your trading career, or maybe you're brand new and you just want a great trade room, a great place to kind of follow along, that free trading course will get you a big head start. You'll learn all of our favorite entry patterns, my entire 3-step strategy, and most importantly, I'll send you hundreds of examples of how we apply that strategy to our favorite futures markets, right? S&P being one of our favorites. So if you're serious about your trading career, grab that free course. It's a great way to get that consistency, that confidence back in your trading. And then the next time I say 1, 2, 3 reversal into hidden channel pullback, you'll know exactly which entry setups I'll be looking for to sell off that high. Now, we also should anticipate this market could go sideways here tomorrow, right? Anytime we see a market go 1, 2, 3 big legs up with really not much of a pullback today, we know there's a really good chance this market goes sideways here. When we have a sideways range with a bull bias like this, there are 2 types of pattern setups you want to look for. One is going to be a failure pattern below the range. The other is going to be a breakout pattern above the range. Now, failures are the most reliable, right? If you want better results, focus on failure patterns down below the low of that range. I want to wait for the price to pull back. Now, at that point, what will happen is a lot of the sellers in the market, inexperienced traders, we assume, will confuse this for a breakout or a reversal. They'll try to get short off the first pullback, and that's exactly what we want, because now all those stop losses are just primed for us to buy right into those stop losses on a failure pattern. Again, failures are my bread and butter when it comes to a range-bound market. How about a breakout pattern, though? If the market does go sideways here, right? If the market does go sideways here, how do we trade a breakout? There are 2 types of breakouts I'm looking for. One is called a 2-try breakout, which is a strong run up, a shallow pullback, a higher high, and a trap low. Strong move up, shallow pullback to the moving average, higher high in price, and a trap low. We call those 2 try breakouts. That is a fantastic breakout pattern, but as you can see, I'm not actually buying the breakout higher, right? There's no number of indicators or divergence I can use that will give me consistent results trading breakouts to new highs. You're more than welcome to try. I did for a couple of years earlier in my career, and I stay away from trading breakouts. I wait for proof of that breakout by holding that pullback, higher high, and that trap low is fantastic setup to keep going, to keep buying higher here. As the market runs higher here, I can also look for a 1, 2, 3 breakout. We look, of course, for not as much of a strong move this time, right? The 2 try breakout really requires a strong initial break out of that trading range. The second breakout pattern, the 1, 2, 3 breakout pattern, is exactly like the 1, 2, 3 reversal. We don't necessarily need a lot of strength on the first leg. It's that second leg that really needs to jump right off the moving average. Once we get that jump, then I can go out, I can grab my high, I can grab my low, and I always want that first test, right? The first test is always the best test. This will be a seller failure, right? A bullish pullback. I would definitely look for a strength move going higher, a trap move going higher. And again, I cover each of those individual entry setups. You know where to look for them. Make sure you grab that free course linked up in the upper right-hand corner, and you get a much deeper dive into each of those entry patterns I've discussed so far. Now, what if the market keeps on grinding, right? What if it keeps on grinding higher? We got a major top up here at 39.64, right? 39.65. That is a major top, right? That top up there is a major top. We then, of course, have within striking distance, that all-time high there overhead. There you can see, though, there is a lot of resistance, right, as we're going up to that 39, 35, 36, 37 area. So I do want to be very careful as this market goes higher here. Anytime I'm concerned about a move higher that runs into resistance, I'm always looking for traps. So as we go higher, I'm looking for trap entries on the way up. If the market takes off higher and then pulls back, right, that will be great too. That wouldn't be bad at all, right? If we run into that level of resistance, right, let's just say we don't go sideways here. We run into that level of resistance, then we go sideways tomorrow, right? What we do is we look for those failures below it, buy below again with those seller failures, or maybe the market runs higher, gives us that nice deep pullback. We trap in those bears with a seller failure pattern into a bullish pullback. Really very similar plan, right, as we had earlier. If we can get that nice deep pullback, seller failure, right, bullish pullback, then again, back up to retest those highs. Not to worry. Tomorrow morning, we're going to do all of this together at 8 o'clock Eastern Time. You got to be a member with us in the trade room, though. You can register on our website and look forward to seeing you there. So we know now the upside, we know the downside, we know how to trade this thing if it turns sideways in a range. Let's keep going, shall we? How about some Nasdaq? Now, Nasdaq is very similar to the S&P, you'll notice. The one key difference, though, on the Nasdaq is we have, as you can see here, we have not reached our triple measured move yet on the Nasdaq, and we also have a big range magnet just below that 13,100 area on the chart. We do have a bull market. I think it's pretty obvious here on the Nasdaq. We do have that weekend gap. That weekend gap will act like a price magnet. I wouldn't go worrying about it right now, and I certainly will not just sell this market because of it. But if the bears were able to get their hooks in this thing, that range is an easy magnet, but more importantly, you know exactly where those bears want to get to this week. They want to get down to that weekend gap at 12,905 3/4. Now, this area overhead, right? This area overhead, 13,353, that is another major top. We do have the all-time highs overhead, except it's a little bit higher up the ladder, right? We don't have the all-time highs of the Nasdaq. The S&P is within striking distance of these all-time highs this week. The Nasdaq, don't get me wrong, the Nasdaq got kind of beat up last week, right? We all saw that, but It could happen. It's just not within striking distance right now, right? Maybe later on this week here, the Nasdaq may have that all-time high back within striking distance. Right now, we have that big top up here, right? 13,350. That's going to be our big obstacle along with that triple measured move. So we're bullish. We know we want to buy pullbacks, right? I want to buy low. I want to buy at support. I really like kind of a spike and channel on this chart right now. One thing about the Nasdaq that we saw on the S&P, we didn't see in the Nasdaq, is there was never any traps today, right? There weren't any traps, right? The S&P, remember, the S&P had that trap late in the morning, right? Or early afternoon, right? S&P had a beautiful trap low. That trap allowed a lot of buyers who were waiting, right? A lot of buyers were waiting for that nice deep pullback today. They never got it, and you can definitely tell they kind of took whatever they could get, right? They kind of took the crumbs at the end of the move there, and they took that trap high, or that trap low. The Nasdaq, you'll notice, we never got a trap, right? They almost did back here, but there was no trap. So any type of pullback right now really has to be seen as a pretty good buying opportunity before we complete that triple measured move, right? Trends love the number 3. Trends love three-legged moves. And so we know there's a big resistance target up there, a big objective up there, and a big, of course, overhead level up there, right, as a major area of concern for these buyers. All right, how do we buy a pullback? What if it's a shallow pullback, right? Deep pullback. And that's kind of the big concern here right now on the Nasdaq. If I can get a relatively shallow pullback, I've got a great spot here, right? Overlapping candlesticks. You know, if you were to look at a volume profile, it would probably look a lot like this, right? A lot of volume there, right? Little volume node right there, little volume node right there, right? I want to buy pullbacks there. I want to buy pullbacks there. The difference, of course, is momentum. Right? Momentum is not going to be a very big deal on a shallow pullback. Momentum will be a very big deal, though, on a deep pullback. So if I get that pullback to the low of the channel, now I'm pretty straightforward here. What my big goal is whenever I get back below the moving average, one of the first things I always look for is for sellers to come in and try to get short off the EMA. Once I see those bears get short, then I know, the odds are so far against the bears right now. Yeah, I mean, obviously the bears may take control. Even a broken clock is right a couple times a day, right? So, yeah, you will see those pullbacks hold, but this pullback going lower is probably a 35% winning ratio. I don't want to be on that side of the number. I want to be on the 65% winning ratio side, which is the opposite direction. So when I see these bears come in try to get short on this, their stop losses are just easy pickings. And we can literally buy off a support level. We can use those stop losses because, think about it. If you're short and you get stopped out, what happens? You have no choice. You got to buy your way out, right? That's the only way out of a short position, right? That's where short squeezes, right, come from, right? Look back the last 2 weeks. That's exactly why all these markets, right, the GameStops of the world, right, took off to the upside because the bigger fish in the sea, they were caught short. And when they get out, the market rips. This is one of the easiest ways, if you want to get better trading results, if you want to get more consistent results, go with the trend, but think about how can I catch traders on the wrong side of the market? Because when you buy into stop losses like that, it gives you quick first targets, it removes the risk quickly, and usually you're going to get a pretty good risk to reward ratio on that trade, which improves your odds of success. Number two, that will also, right, pull back very often and give you a re-up, right, or a reload or an add-on right there. So again, these are combinations, right? Failure into pullback combination. That would be a great setup on a pullback into our support zone here, our buy zone on the pullback here. Now, if the market really pulls back deep, what you've got to be looking for is there's two things whenever you have a really deep pullback. One is, right, we oftentimes see these what we call two-legged pullbacks, where you'll see one leg lower and then two legs lower. What you want to do is you want to draw that trend line down and then look for that up and over and use that trend line on the other side. Again, we call these two-legged pullback setups because usually there are two relatively easy to see legs. Draw the trend line overhead, get up and over it and buy it. Now, one of the things we talk about in our trade room is you always want to have some daylight in between the price action and the trend line, right? In other words, I don't really like them when they go like this and grind, right, and grind down. When that happens, it's usually going to end up being a trap above that high. Wait for that trap and buy into that failure. I don't want to go into too much detail right now because we'll cover it tomorrow morning, obviously, in the trade room. But you want to go up and over, right, and then back down to that trend line. Nice strong signal candle. Be a two-legged pullback on a real deep pullback. If the market just kind of pulls back strong, right, you know what I mean? If it really pulls back strong, I like the area. I love this area as a place to get long. Again, there's probably a lot of volume piled up right in that area right there. I can easily see why people would like to buy that. The problem, though, is if I see a strong move down, there's a good chance I'm going to get one more leg in the same direction. I've got that range right below me acting as a magnet. So if I get the strong move down, that puts me in a great location to buy. The problem, though, is momentum's a real pain in the butt. So how do we buy a really deep pullback without getting in too aggressive, right? Because what will happen is if I use that same type of failure pattern on a real deep pullback, a lot of times what will happen is it'll go a little bit higher and then crash back down again. So to avoid that problem, I use what's called a nested failure. It's basically a failure inside of that pullback. In other words, what I'll do is I'll let the bears try twice. Once I see those bears trying twice, now I know their stops, again, are sitting ducks right above that high. And I know in these situations, a lot of sellers are trapped short in the market. If that thing runs higher now, all those short sellers who got in first or second, they're going to freak out, right? They're going to panic. They're going to buy their way out, and this thing will oftentimes snap right back up to retest the high. Now, as an added bonus, I can also draw a trend line off of those lows. I can look for a trap below that low, right? So those are two ways to trade those nested entry patterns off a rising support trend line, or, sometimes you don't get that rising support trend line and you can just simply buy into stop losses as the market races higher. Another thing to keep in mind is a lot of times when the market fails and runs up like this, because there are so many traders trapped short, the market will oftentimes not give you that classic pullback setup, right? That kind of follow-up pullback. A lot of times what will happen is it'll run higher and all you get is a trap. So keep your eyes on that, right? On that trap. Failure into trap on the pullback, right? Just some food for thought there on the pullback there. And then, of course, right? So again, deep pullback, looking for that failure pattern into, again, it may just snap higher there and go into a trap entry. We'll love to go back and retest that high for that final objective. Now, of course, if we do make a pullback lower, if the bears do sink their teeth into this thing and run this market lower here now, 9 times out of 10, when you get that 1, 2, 3 reversal, you mark up that low, you mark up that high, 9 times out of 10, you're going to get a really nice result selling off the top of that channel. And a lot of times, it's just because of that momentum. It's almost like a FOMO setup, right? Because everybody sees the market reverse. Nobody wants to miss that first pullback. It's a very, very reliable setup. And again, I'm not saying we just blindly sell the top of that channel. I look a lot for buyer failure patterns, bear pullback patterns, right? Strength moves, and of course traps going lower. Again, I'm not going to go into all those details right now to try to keep the video a little bit shorter than too long here today, but I will go over all those pattern setups in a lot of detail and really slow it down for you in that free trading course. So I definitely recommend grab that link in the upper right hand corner, right? Grab that link, make sure you get registered for the free course. Pause the video if you need to. You definitely want to make sure you grab that. And then also too, right, we may also see it, right, 1, 2, the reverse, and it may get stuck right back inside this range. Now, we talked about ranges already, right? If I have a bear market into a trading range, what do? I find levels of resistance up above the range. I wait for the price to poke its head above the range, and I simply use what? Failure patterns, buyer failure patterns. And again, I'll kind of illustrate them here right now. You'll learn all the details in the trading course here. But a buyer failure pattern at resistance up above the top of that range. Just remember, though, we do need to see that range confirmed, right? We know what that range is, but they got to confirm it when they get back into it. All right, guys? So that's the idea behind the pullbacks here, right? Or reversals. Now, keep in mind, it is likely once we get up around these highs, we're probably going to see some sort of range up here. Obviously, anything is possible, but be aware of a range with a bull bias into a triple measured move. What do? We find levels of support below the range, right? We wait for that pullback. You got it. We trap in those bears with a seller failure pattern, and we use those stop losses as gasoline, right, to rip it going higher here. One of my favorite setups in a range-bound market is a pullback below, seller failure, and buying right into stop losses. If the market does go higher here, we really have to get through this 353 area before I start to feel comfortable, right, buying as we go higher. The next level overhead, you'll notice, is quite a big distance as we go higher. You got a big round number, not that big, but 13,500. That'll be an easy kind of psychological target as we go. You know, a lot of this has to do with how the market breaks higher here. You know, for example, if the market was to go 1, 2, 3, I'll just go out and find a new channel, mark up that new hidden channel, right, and buy that pullback off the low of that channel. If the market just simply kind of grinds higher here, what I'll do is I'll adjust this channel and then try to use that same strategy, right? Pull back, failure, right, and back up from there. So a lot of this has to do with kind of how the market runs higher. If it just kind of grinds higher here, right, then I'm just going to keep adjusting this channel, and I'll keep looking to literally trap in those sellers with those failure patterns, as we talked about already here a couple times, right, on the low of that channel. But again, right, if the market jumps up, pulls back, and really goes, well, yeah, now we can use that for its own channel. Mark that high, mark that low, right? And I want the first test off the low of that channel. All right. Also, keep in mind, if it was start to rip higher here, right? Market races higher here for whatever reason. Shallow pullback, higher high in price, trap low. I would have no problem with that one too. Right? That's a great one. Just remember, though, that first leg up has to be very, very strong, followed by a shallow pullback. The shallow pullback is the giveaway, because everyone's waiting for that pullback to the moving average. It barely misses it. Then you get that trap or that higher high. Combine a shallow pullback with a higher high. That's the recipe for success on that trap low. And of course, you know me, right? I'm always trying to find support, right? Support levels that I can combine on those entries as we go higher. So as the market goes higher, looking for those 1, 2, 3 moves, those 2 try breakout moves. And again, don't be surprised here if it goes up, goes sideways here for a while, pulls back, get that beautiful failure here at some point, right, tomorrow morning. Time will tell. Time will tell. Nasdaq is looking good. The big question I have, though, is will they get this weekend gap? What do you think? Wednesday, Thursday, Friday? Let me know in the comment section. What do you think there? Weekend gap? What do you think? Wednesday, Thursday, Friday? Never? Next week? Next month? Right? What do you think? Hit me up in the comment section below. Let me know when you think this weekend gap might get filled. Maybe you think I'm smoking something, right? And it's never getting filled. Maybe you think we're going back to these all-time highs this month. Let me know in the comment section. And I hope while you're down there, you'll subscribe to our channel here and hit that thumbs up button for me. Hope you guys are enjoying the video here so far. All right, let's grab some gold, shall we? Let's grab some gold here. Now, gold is probably the most interesting chart of the day here. So we had this big move down on gold last week, right? Gold got clobbered, right, last week. Big move down last week to finish off the week. We get that big bounce, right? That short covering rally. People are taking profit. What is really interesting, though, is the market opens up right here, right? Market opens up right there. That's the kind of the first candlestick of the week, if you will, right? Market runs up, right, like a dart, right, going higher. For whatever reason, the buyers are like, oh, shoot, this is the wrong direction. Let's go this way, right? And they come back down. Here's what I think is interesting, is they sit on that low. Whenever we see a market that jumps up and then rolls over, you know where they want to go, right? They want to go right back to that low a day, right? It's just the easiest target. Everybody knows where it is. It's just an easy magnet whenever you get those kind of up and then collapse back down again. Now, this is where things get interesting because you'll notice what happens. The market goes clearly sideways here. Double tops, double bottoms, flat moving average. That creates a trading range. So what ends up happening is we get this up, down, sideways, right? Move it all around, shake it around, right? Sounds like a song. And then we spin our way going lower, okay? Now, the bears, they want to retest this low. Right? Remember, anytime we see a strong move down like this, there's a big bullseye, right? There's a big bullseye right on that low. And they're right there. So this is why I said earlier, I'll tell you right now, if I'm a seller, this is the last place I want to be selling, right? I fall into that category right now of I am too low to want to sell. Right? I can't sell down here. There's no risk reward ratio here, right? For all I know, this is kind of a false bottom. I can't risk small to earn large right here. I mean, yeah, maybe it keeps going down to that 1700. That's the next level below it. But I'll tell you, there's a measured move right there, right? So it's like, gosh, it's difficult. Trying to get short right now on gold, it's really difficult to find a way to do it safely, right? We know we're bearish. There's no doubt about that. But here's what's interesting. Whenever there aren't that many options for the bears, all of a sudden the bulls start to go, well, wait a second, let's take advantage of this, right? We got these bears back into a corner. Let's run them out of town. Can we get this thing back up now into that range? And this is where we may end up seeing a nice snap back up, right? If I measure the amount of the move, below the range here, real quickly here, and project that higher, I'll tell you we've got a pretty good potential here. If not, at the very least, for a quick scalp going higher, but potentially a full-blown reversal, maybe all the way back up, right, to that 53 area tomorrow, right? So I really like the sell side, but there just isn't any way to do it right now. So that's my big concern, right? My big concern here now, move this over here real quickly, is I want to be a seller, but I'm running out of options. There are no options down here to get short. So how do I buy a market that is clearly bearish, right? I'm at what looks to be like a kind of a false bottom, right? Shave off those wicks down there. You can see they're kind of hesitant right there. So what would be the best way for me to get a reversal out of this? We know we have a range. That range is a magnet. What I want to see is a crown reversal pattern. Now, I'm going to teach you guys a couple different reversal patterns in our advanced classes here at School of Trade. One of the most consistent, though, and something I always like to teach my new clients, is a crown reversal pattern. And basically, we know the bears have control, so we're going to give them the benefit of the doubt. Let those bears try once. We'll let them try twice. And ideally, well, not ideally, I need to get that trap, right? That's going to be the best possible entry to be a buyer. So again, market runs lower, running out of space here, right? As it tries to go lower, bears try once, bears try twice. Now notice how I draw this out. It's a higher high in price followed by a trap low. That's what makes this pattern so special, because what happens is it gets those bears trapped in, and then it gives me a great chance to kind of weasel my way into a trade, right? I'm not buying high, I'm buying low, right? That's what makes this trade setup so powerful. So a crown reversal here, right, to buy it off of, right, to buy it off of that low. Now, I'll be honest, the hard part is as we go lower, there's not much relief here for those sellers. You've got more big levels of support down below us, right, on the weekly chart right now. The last big low is at 1702.4. Get a big round number there. So I'll tell you guys, don't be afraid here. If the market is running lower for tomorrow, we take out the measured move, 1, 2, crown reversal, right, back up. We take out the 1702.4, 1, 2, crown, and back up. So we've got a lot of really great potential here to be a buyer. How could I sell this market though, right? As the market goes lower, how do I sell it? It's very difficult, like I said, to get a plan put together. The only way that I would feel comfortable selling down here would be if we either A, get a strong move down, a pullback to the moving average, and a blast right off the moving average. If I can get, like I said, 9 times out of 10, if you get one of these 1, 2, 3, boom, right, jumps off the moving average, you'll be able to use that, right, that channel and make some money off the high, right, of that channel, no matter where it is, right? It's just a very reliable chart setup. So that's something we look for tomorrow. What's probably more realistic though is if we get down here and we start going sideways, right? Go to a range down here. If that's what happens, then this area of support becomes resistance. I can use that failure pattern now, right? Buyer failure, and we can sell into those stop losses from there. That would probably be the most consistent way to sell short, right? As we go lower. So again, it's either going to be a 1, 2, 3 breakout move, mark the low, mark the high, sell off that high. Again, failure, right? I won't go into all the details of which entry pattern I'll use. You'll learn that in the free trading course, or we're looking for that buyer failure pattern up above the high of that trading range. Now, what if the market just spits back higher here, right? What if it spits higher here? Can I sell this thing short? I can sell short as long as I get pretty much the same entry pattern the buyers need. In other words, buyers try once, buyers try twice. I've got a lot of concern right now about this low. And so what's the best way for me to avoid selling too close to support? Traps, baby, right? So if the market runs up, we get the buyers trying once, buyers trying twice, right? Again, I'm worried about selling too low. If I want to get short, it's got to be a trap above that high. A very good setup. It just doesn't seem as likely tomorrow, right? What'll probably happen is we'll probably see something like a 1, 2, 3, right? That 1, 2, 3 reversal. You know where the market now wants to go. Now we've got momentum now for the buyers. What do? Mark up that high, mark up that low. You got it, right? Get long off that first pullback, right? Maybe it's a seller failure. Maybe it's a bullish pullback, right? Into strength, into traps. We'll talk more of those small details as far as these specific entry setups, right, tomorrow morning in the trade room. And of course, all that is covered in that free trading course, right? All the entry patterns after we get that 1, 2, 3 reversal, mark that new channel, and we'll look to apply one of those entry setups around those lows. If the market takes off to the upside, we can definitely look for those 2 try traps. Just make sure you get a really strong move going higher and then grab that trap low from there. Again, we know where these buyers, right, are trying to go. The only real variable for tomorrow is if we go back into that range and we kind of go to sleep on this thing, right? If that happens now we've got, for the most part, a bullish market, right, into a range. We can still look for those crown reversals, right? Still look for those crown reversals. If we go sideways here, I will definitely continue looking for those crown reversals. And then if the market pushes higher here, right? If it pushes higher here now, this now becomes one of those, well, it could be a 1, 2, 3 breakout of the range, mark the high, mark the low, buy the low. It could be a 2 try breakout, right? So again, same idea here. Just use one of those breakout patterns if we do go back up into that trading range. All right, guys? Boy, I've covered a lot in this video tonight. I'm sorry for the fast pace of the analysis here. Hope you guys enjoyed it, though. Don't forget, though, tomorrow morning, 8 o'clock Eastern time, I want to see you there, right there with me. We had a great kickstart to the week this week in the trade room. I would love to see you there tomorrow morning, going elbow to elbow with me tomorrow morning, right? Finding those good setups. I'll put all the links you guys need to get registered as a member. That way you can come out and trade this stuff with us every morning at 8 o'clock Eastern time. Don't be afraid to call the office if you guys have any questions. Again, the links you guys need is in the description of this YouTube video. It's also on our blog at Sideways Markets. Below me tonight on the video. Don't be afraid to call the office. Don't be afraid to use that live chat on the left, live chat on the right. And I hope by now I've earned a thumbs up or maybe a subscribe on our YouTube channel. And don't forget, if you have any questions, you can always drop those questions in the comment section below or call me in the office here. I'll be here for the rest of the evening. All right, guys, thank you so much for tuning in. Thanks for sticking around to the end of this video. Hope you guys enjoyed it. We'll see you guys tomorrow, 8 o'clock Eastern time in our trade room. If not, make sure you come back and join us on the next edition of this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.